Hello, guys. Okay, so my largest holding, Alibaba, reported earnings, and the stock is reacting pretty negatively. Now that the market's opened, I hold ADS shares, right? So the markets in US only opened at 2:30, and the shares are down about 7%, which surprises me. To be fair, I mean, I think overall the results were very, very strong. Okay. And so I went through the quarterly report and I went to the investor presentation and I just put together the highlights of both of these reports for you guys to see. And look, I just created a Word document with this information that you can see right here. Overall, the reason I think the reason the markets are reacting negatively is because they missed both earnings, they missed expected earnings and revenue, and that's even though it was just a slight miss. Of course, if it doesn't live up to Wall Street estimates, even though regardless of how lofty they may be, the market will definitely react negatively, and this is exactly what we see. But as you can see, for example, adjusted earnings per share, it was meant to be it was expected to be 12.56. They delivered 12.52. So they literally missed by a hair. It's just a very narrow miss. But anyway, I'm going to delve deeper into the main highlights because I think the report was very strong and Alibaba is definitely on the right path to capitalize on further growth. And I will show you why. So, look, despite the narrow miss, revenue still grew 7% year over year and adjusted earnings still rose 23%. Okay, this is a business that a lot of people were calling dead a few years ago. So I started accumulating shares in January 2024 when everybody was calling China uninvestable, and they were saying Baba was a dead business because it could barely grow revenues. Well, I mean seriously, revenues are growing year over year. This time 7%, and you can see profitability has improved sharply. But don't take my word for it. Let's delve deeper into some of the most important metrics. So, for example, EBITDA jumped 36%, and this has been largely driven by improved operating efficiency. Net income jumped a ridiculous amount, but this is because of mark-to-market gains on equity investments. For you guys who don't know, Alibaba has many investments in especially in Chinese companies, and of course, when the value of those investments collapse, net income, which accounts for those changes, will collapse accordingly. If they go up, it will jump accordingly. So last year around this time, Chinese markets were very in a very bad shape, as you know, and so of course it makes sense that now with things improving a lot in China, net income just jumped. But that's why I like to pay attention in the case of Alibaba to non-GAAP operating measurements, like for example non-GAAP net income. And here you can see that we still had a 22% increase, even if we exclude all the equity investments the company has. So very strong performance on the bottom line. Operating cash flow jumped 18%. Okay, so probably some people will. I'm pretty sure. I still haven't read any reports coming out of this after the release was made by the company, but I'm pretty sure people will start criticizing capex. Capex is essentially the investments the company is making in plants, property, equipment. Look, this is one of the leading AI players, one of the leading cloud service providers and AI players in the world. Like all the other players in industry, if you want to be at the forefront of innovation, if you want to be a major player in the AI space going forward, these heavy investments are justifiable, if you ask me. Okay, but one of the things that I know that I want to see is I want to see these investments translate into growing revenues and profitability going forward. And if you remember from my previous videos, this is not new. So Alibaba has been heavily, aggressively investing into growth over the last few years, and now we can definitely see that those investments are bearing fruit because we can see improving revenues and profitability across the board. Very positive. So yes, free cash flow, of course, decreased 76% year over year, partly because of this jump in capex, but still, it's understandable given how aggressive the company is, how the company wants to position itself for growth going forward. Now, business segments highlights. Of course, Alibaba has six major business segments. And look at this, guys. Taobao and Tmall revenue increased 9%. Alibaba International revenue jumped 22%. Cloud Intelligence revenue jumped 18%. This was led by accelerating public cloud adoption and triple-digit AI product growth. Seven straight quarter, right? So Alibaba is seeing triple-digit AI product demand for the is seeing triple-digit AI product growth for the seventh consecutive quarter. Very strong. Now, Cainiao Logistics was the only segment out of the six that showed decreasing revenues, only 12%, and this is due to great internal integration with e-commerce ops. Okay, local services revenue jumped 10%. Digital media and entertainment revenue jumped 12%. Does this look like a dying business? Yeah, and what's more, in terms of major shareholder updates, the CEO said we remain committed to enhancing shareholder returns, and they are definitely showing that via share buybacks. They bought 11.9 billion of shares during fiscal year 2025. That translates into a 5% net reduction in share counts. Very strong. So they are rewarding us shareholders. And in addition, the board just authorized a $4.6 billion in total dividends, which include the annual dividends pay plus a special dividend. More money for us on top of all the capital appreciation that I think is going to come, is going to continue to come. So look, my conclusion is this. Despite narrowly missing expectations, this was a very strong quarter operationally. I can see growth across core segments, rising profitability, and shareholder returns show that Alibaba's aggressive investment strategy is gaining traction. CapEx has spiked, yes, as we just covered, but that's consistent with what we are seeing across the tech space. A race to lead in AI and infrastructure. That's the price you pay. And sure enough, they are still the cheapest AI company in the world, not just in China. And curiously, they are also the major cloud service provider and AI provider in China. So, and yeah, as a long-term shareholder, right, I started buying shares in January 2024. This is exactly what I hope to see. Okay, so we want to see improving fundamentals, better efficiency, and we want to see reinvestments in future growth. And to make things sweeter, we can see that Alibaba is not one of those companies that needs to borrow money in order to fund its growth ambitions. If I show you here the presentation that they delivered, I mean, look at this. Let's have a look at free cash flow. This is cash flow and balance sheet. If I show you guys, look, this is the net cash position. Look at the net cash. They have 50 billion in net cash. This is the net cash position. Almost, yeah, $50 billion. I mean, that's a lot. Look at the cash balance in 2025. As you can see, $82 billion. I mean, this is incredible. And you can see net cash flows relating to capital expenditures that more than doubled, as we discussed. They are funding all this growth with money from their own operations. They have the power to do this. They are not like one of those companies that needs to borrow money at possibly at cost or at a great cost for shareholders down the line. But no, they are a very profitable company, and they are using that cash to fund, to reinvest back into the business, which is something that I like a lot. So I mean, overall, look, I'm very happy with this report, and the fact this is the cost of revenue and operating expenses. So costs are going up, but not a big deal. Where they jumped the most was within sales and marketing expenses. All right, this excludes SPS. The other two, product development expenses and general and administrative expenses, remain pretty much the same. So I'm not concerned about that at all. And then you can see, look at that. These are all the segments that the company has. Look at the revenue year over year. We just pointed that out. The consolidated revenue was 7%. And then you can see adjusted EBITDA year over year. Look at this. Absolutely stunning, right? This is exactly what I want to see. And yeah, so the market is reacting on the news, is putting a lot of emphasis on the fact that they missed revenues in the earnings, in the adjusted EBITDA, right? But I even though they missed, yeah, it was just by a hair, and they are growing. And remember, we are long-term shareholders. Ultimately, share prices will always follow the evolution of the company's earnings. If revenues and earnings continue to improve, it doesn't matter if they just miss by a hair this quarter. Remember, those analysts typically are very short-term focused, but we are long-term focused, and we are see a significant improvement in the company's operations, in the way they are doing business. And it's a testament that their strategy, which they highlight here, and it's not news to us. Where is it delivered? Their user-first AI-driven strategy is working. Okay, I like to see this a lot. So yeah, I'm not concerned at all. I think it was very positive, and I think I will probably consider buying if the pullback continues, and if the valuations start compressing further, which they will if the sell off continues and is exacerbated over the next few days. I will likely consider adding to my position. I already have a very large position in the company, so I'm not sure if I'm going to do that. But I mean, I'm certainly not selling a single share. I believe the path to $200 per share is still pretty much intact, and it will happen much sooner than expected. So yeah, hope you guys enjoyed the video. Let me know in the comments what you think. If you think this was a lackluster earnings report, or if you think it was very positive based on what I just highlighted here. Yeah, let me also let me know if you want to see more of this stuff going forward.